य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
We shall now begin with the provisions of Volume 2 of the Revised Code of Ethics. Let's have a glance on the 5 most important substantive changes in the Volume 2 as compared to Part B of the 2009 Code. These are changes due to the CA Amendment Act 2011, Amendment in CA Regulations 1988, changes in the Council Guidelines, changes in the auditing and accounting standards, provisions of the Companies Act and resultant changes, and changes arising from the Volume 1 of the Revised Code of Ethics. Further, Council decisions and clarifications given by ESB and other committees having ethical repercussions have been incorporated under respective clauses of the 2 schedules to the Act. Changes in Advertisement Guidelines 2008 and Council General Guidelines 2008. Changes in the commentary under clauses 6 and 7 of Part 1 of the first schedule pertaining to the solicitation and advertisement to contain new permissions and prohibitions. Changes in the commentary under Clause 8 of Part 1 of the first schedule pertaining to communications. The 5 most important structural changes over 2009 Code in the Volume 2 of the Revised Code are as follows. All the paragraphs are now numbered. Titles of all the provisions are given for a better identification of the relevant provisions by the members. The obsolete appendices have been repealed while the new relevant appendices have been incorporated. All the disciplinary cases have been removed from the commentary to the clauses of the 2 schedules and shifted to Volume 3 of the Revised Code of Ethics, also known as the case referencer. The Revised Code of Ethics have been properly aligned in the paragraph to give a uniform look to the code. Management consultancy services have been permitted by the Council to the members in practice via guidelines passed under Section 2, Subsection 2, Clause 4 of the Chartered Accountants Act 1949. These are contained in the Code of Ethics 2009 also. In Volume 2, administrative services have been allowed to the members as a new management consultancy service. This is to align it with the Volume 1, where administrative services are allowed to the members who are statutory auditors. The provision is appearing in Section 602 of the Code of Ethics 2019. It refers to the routine or mechanical work like compliances or submitting forms. It is differentiated from management's responsibility. While management's responsibility cannot be undertaken by the auditor, administrative services can be undertaken by him. There was no enabling provision for administrative services in the earlier code from the point of view of a member in practice. Under the Guidelines for Management Consultancy and Other Services in the 2009 Code, there is an entry to allow insurance financial advisory service. The difference between old and the new code is that in 2009 Code, serial number 26 of the MCS Guidelines permitted insurance financial advisory services under the Insurance Regulatory and Development Authority Act 1999, including insurance brokerage. While in the new code, this serial number reads Insurance Financial Advisory Services under the Insurance Regulatory and Development Authority Act 1999, including insurance brokerage but not including insurance agency. Thus, it has been clarified that taking insurance agency is not within the purview of a member in practice. In the guidelines for management consultancy and other services with regards to valuation services, the earlier position in the 2009 code is as shown. It said that the valuation of shares and business and advice regarding amalgamation, merger, and acquisition. In the revised Code of Ethics, this provision has been amended as under: valuation of shares and businesses and advices regarding amalgamation, merger, and acquisition. Acting as a registered valuer under the Companies Act 2013, read with the Companies Registered Valuer and Valuation Rules 2017. Thus, a member in practice may act as a registered valuer also, subject to the permissions given under the relevant rules. The new incorporations in the revised Code of Ethics on visiting cards, which were not there in the 2009 code, prohibit the members from mentioning their positions like directors in companies, memberships of political parties, or chartered accountant cells in political parties, or positions in clubs or other organizations. It is in harmony with the Section 7 of the Act. Now, insolvency professionals and registered valuers have been allowed to be mentioned on the visiting cards while the earlier code was silent. Let us now look into the incorporations in the commentary under clauses 3 and 4 of the Part 1 of the first schedule to the Act. While the earlier Code of Ethics was silent on the issue of referral fees amongst the members, in the revised Code of Ethics it has been permitted under the commentary to clause 3. On multidisciplinary partnerships (MDPs), it has been clarified that despite Regulations 53A(3) and 53B of CA regulations, wherein partnership with other professionals has been opened up by the Institute, MDPs are not allowed till the regulators of the other profession also allow and ICAI issues modalities. Else than that, it is clarified under commentary to clause 4 in the revised volume 2 that a member in practice cannot become a partner or a designated partner in an LLP not carrying out professional work for the same reason that MDPs are not permitted. Hence, the position of member in practice being a director simpliciter cannot be compared to a partner simpliciter. The guidance on tenders of the professional assignments has been provided in the new code. The 2009 edition of the Code of Ethics under the commentary to clause 6 of Part 1 of the first schedule to the Chartered Accountants Act 1949 noted that it is not prohibited to respond to tenders of professional assignments. The revised Volume 2 of Code contains the guidance on the tenders in the light of the guidance on tenders issued in 2016. It says that a member of the institute in practice shall not respond to any tender issued by an organization or the users of professional service in areas of service which are exclusively reserved for chartered accountants such as audit and attestation services. However, such restrictions shall not be applicable where the minimum fee of the assignment is prescribed in the tender document itself or where the areas are open to other professionals along with the chartered accountants. The FAQ on tenders as issued in 2016 for comprehensive guidance on tenders have also been included in the commentary to clause 6. There is another stipulation as to tenders, that is, in case of exorbitant EMD sought by the clients from the members, they may write to ESB, which will look on case-to-case basis. The members are also required to maintain a cost sheet. There is a new provision related to sponsoring activities in the revised code on which the earlier code was silent. In the revised code, it is mentioned under commentary to clause 6 of Part 1 of the first schedule to the Chartered Accountants Act 1949 as on your screen. A member or a firm is not permitted to sponsor an event. However, one may sponsor an event conducted by the Program Organizing Unit of ICAI, provided it has prior approval of the CPE Directorate of ICAI. Members sponsoring any activities relating to CSR may mention their individual name with the prefix CA. However, the mention of the firm name or CA logo is not permitted. While the earlier code had no provision on the advertisement of teaching or coaching activities, the new code advises the member to abstain from advertising their association with coaching or teaching activities through hoardings, posters, and other means. Although they are allowed to put signboards outside the coaching or teaching premises mentioning only the name of the institute, the contact details, and the subjects. The size and type of signboard shall also be in accordance with the Council guidelines as applicable to the firms of chartered accountants. Educational videos can also be uploaded, but without any reference to the CA firm wherein the member may be a partner or a proprietor. In this slide, we will discuss some of the changes related to advertisement. The earlier Code of Ethics was silent on the issue of TV or movie credits. In the new code, under commentary to Clause 6 of Part 1 of First Schedule to the Chartered Accountants Act 1949, a member or a firm's name is allowed in a TV or movie credit, provided it is not mentioned differently from other persons. In the earlier code, it was mentioned that sharing of firm's detail during an interview was not to result in publicity. In the revised code volume 2, it has been added further that any detail shall be only given on a specific question and of factual nature only. In the earlier code, it was mentioned under commentary to Clause 6 that a firm name is not permitted while authoring a book, while name of the individual member is allowed. In the revised code, articles and presentations have also been included in the commentary. It, however, seeks to prohibit mentioning any professional attainments. The use of prefix CA or the name of the firm is permitted. The earlier code was silent on the issue of advertisement of anniversary celebrations of a firm, but in the revised code, it is mentioned that considering the need of interpersonal socialization relationship of members through such get-together occasions, advertisement for silver, golden, diamond, platinum, or centenary celebrations of CA firm may be published in the newspaper. Further, regarding the size and illumination of signboards, the earlier code allowed the members to exercise their own discretion while expecting good taste and advising to avoid neon lights on the large size boards like traders or shopkeepers. The new code adds further that the signboard should be appropriately visible and illuminated. Now the internet has been added to TV, films under commentary to Clause 7. In the earlier code, lecture forums were allowed on the radio and TV. Internet has been added to this list in the revised code. The change position in the revised code is that members may appear on television, films, and internet and agree to broadcast in the radio or give lectures at forums and may give their names and describe themselves as chartered accountants. Special qualifications or specialized knowledge directly relevant to the subject matter of the program may also be given. Firm name may also be mentioned, however, any exaggerated claim or any kind of comparison is not permissible. What he may say or write must not be promotional of him or his firm, but must be objective professional view of the topic under consideration. In the earlier Code of Ethics, there was a brief reference of Institute's network guidelines under commentary to Clause 7 of Part 1 of the First Schedule to the Chartered Accountants Act 1949. In the revised code, there is a reference of revised network guidelines. Further, it seeks to prohibit members from joining networks other than those registered with the Institute. The earlier edition of Code of Ethics mentioned the prohibition on the use of firm logo under commentary to Clause 7 of Part 1 of the First Schedule to the Chartered Accountants Act 1949. There is a continuing prohibition on the firm logo in the revised code also. Further, in the revised code, reference of permission to use common CA logo has been incorporated. Accordingly, a common CA logo guideline have been added via the new appendix. Following are the acceptable modes of communication as compared between the earlier Code of Ethics and the revised Code of Ethics. In the earlier code, it was provided that the members should communicate with the retiring auditor in such a manner as to retain in their hands positive evidence of delivery of the communication to the addressee. In the opinion of the Council, communication by a letter sent registered acknowledgement due or hand against a written acknowledgement would normally in the course provide such evidence. In the revised code, the same list has been broadened as on your screen. Communication by a letter sent registered acknowledgement due by hand against a written acknowledgement, acknowledgement of communication from retiring auditor via the email address registered with the institute or the last known official email address, and through unique document identification number UDIN generated on the UDIN portal would in the normal course provide such evidence. The earlier code casts no duty on the previous auditor in case of change of audit assignment. He can choose to remain silent or not to reply to the incoming auditor's communication. the duty is cast only on incoming auditor. In the revised Code of Ethics, the commentary to Clause 8 of Part 1 of the first schedule to the Chartered Accountants Act 1949 have been aligned with the Volume 1 of the Code so as to contain the following. On the request of the incoming auditor to the retiring auditor for providing known information regarding any information of which, in the retiring auditor's opinion, the incoming auditor needs to be aware before deciding whether to accept the engagement, then the retiring auditor shall provide the information diligently. Certain peculiar circumstances relevant in the contemporary times while communicating with the previous auditor have been incorporated in the commentary under Clause 8 of Part 1 of the first schedule to the Chartered Accountants Act 1949. The earlier code was silent on the case of the premises being logged. However, the revised code provides that the communication received back by the incoming auditor with the office found logged written on the AD shall be deemed as delivered. Also, in the case of the firm not being found at the given registered address, the earlier code was silent. However, the revised code provides that if the communication sent by the remarks no such office exists at this address and the address is registered with the institute, it is deemed to be delivered unless the retiring auditor proves that it was not really served and that he was not responsible for such non-service. The earlier code provides that it is a healthy practice to communicate in case of certification. However, in the revised code, this provision has been repealed. Let us read the provisions of Clause 9 of Part 1 of the first schedule to the Chartered Accountants Act 1949. It says that a member in practice shall be guilty of professional misconduct if he accepts an appointment as an auditor of a company without first ascertaining from it whether the requirements of the relevant sections of the Companies Act 2013 in respect of such appointment have been duly complied with. The revised code have been made ensuring the compliance with the provisions of the Companies Act 2013 with regards to appointment of the auditor. Accordingly, the commentary under Clause 9 in the Code of Ethics is also aligned with Companies Act 2013. The change in Clause 9 is subject to legislative amendment by the Parliament. The definition of director simpliciter has been elaborated in the revised code from the earlier ordinary or simple director to an ordinary or simple director who is not a managing director or a whole-time director and is required only in the board meetings of the company and is not paid any remuneration except for attending such meetings. The earlier code was silent on the conditions for a member in practice to be a karta of an HUF doing business. In the revised code, under commentary to Clause 11 of Part 1 of the first schedule to the Chartered Accountants Act 1949, one can find guidance for the same. Such an HUF must result from inheritance or succession or partition of the family business. This can only be done after specific and prior approval of the council. The Karta cannot have an active role and is not permitted to perform attesting function. Further, a clarification has also been incorporated in the commentary under Clause 11 of Part 1 of the first schedule to the Chartered Accountants Act 1949 that a member engaged as Karta of an HUF doing family business will be within the limits prescribed by the Council if he makes investments from the funds pertaining to HUF only, provided he is not actively engaged in the management of the said business. Commentary to confidentiality has been elaborated in the revised Code of Ethics. In the earlier code, under the commentary to Clause 1 of Part 1 of the second schedule to the Chartered Accountants Act 1949, the appropriate authorities who give consents were mentioned. For example, in the case of sole proprietary concern, the consent may be given by the proprietor or his constituted attorney who is legally empowered to give such consent. In the revised Code of Ethics, the above commentary has been modified so as to mention the appropriate authority as the one from whom to seek consent. For instance, in the above example, in case of a sole proprietary concern, the consent may be sought from the proprietor or his constituted attorney who is legally empowered to give the consent. It would not be material as to which representative of the client actually accords such consent. The following additions have been made in the commentary under Clause 4 of Part 1 of the second schedule on substantial interest in the new code. Modification in the situation of conflict of interest in accordance with the Companies Act 2013. Other situations of conflict based on the Council decisions have been incorporated. For example, an internal auditor cannot be a tax auditor at the same time. Cooling off period after the completion of tenure as a director. Member is not supposed to be an auditor of the company for a period of 2 years from the date of completion of his tenure as a director. In the generally accepted audit procedure, the following additions have been made in the revised code in the commentary in Clause 9 of Part 1 of the second schedule. The requirement of peer review in case of audit of listed companies. Pursuant to the SEBI notification, the statutory audit of listed companies under the Companies Act 2013 shall only be done by those auditors who have subjected themselves to the peer review process of the institute and hold a valid certificate issued by the Peer Review Board of ICAI. Mandatory FRN or membership number. The members are required to mention the membership number or the firm registration number to all the reports issued in pursuant to any attestation engagements, including certificates issued by them as the proprietor or a partner of the firm. Requirement of UDIN with effect from 1st July 2019 on all corporate and non-corporate audit, attest and assurance functions. In the earlier code, advertisement guidelines appeared at different places. In the revised code, these have been consolidated at a single place under the common title of Advertisement Guidelines, as you can see on your screen. The website guidelines, guidelines on telephone directories, and online consultancy on the third-party platforms, all of which appeared under Clause 6 earlier, and specialized directories and advertisement through press release in certain circumstances, which earlier appeared under Clause 7. The changes effected in the advertisement guidelines in the revised code are: write-up will now include social networking websites also. Changes in permissible details in a write-up are: web, has been, will now be, can be replaced with the word website. The format of name and chartered accountant is now supposed to be replaced with the prefix CA followed by the name. The passport size has been replaced with passport style with relation to the photograph. In case of individual members, position held as directors or managing directors in a management consultancy company registered with the institute can be mentioned. In case of firms, affiliations with a network registered with the institute can also be mentioned. We may now see the comparative position in the advertisement guidelines under the earlier and the revised Code of Ethics. In the earlier code, it was given that the write-up should not be false or misleading and bring the profession into disrepute. In the revised code, it has been provided that it shall be honest and truthful. In the earlier code, it was given that the write-up should not claim any superiority over any other member or firm. In the revised code, it has been provided that there shall be no exaggerated claims for the services offered by the member of the firm or the qualifications or experience of the member or any partner or any person associated with the firm. In the earlier code, it was given that the write-up should not be indecent, sensational, or otherwise of such nature which may likely bring the profession into disrepute. In the revised code, it has been provided that it should not be of a nature which may bring the profession into disrepute. In the earlier code, it was given that the write-up should not contain testimonials or endorsements concerning members. In the revised code, it has been provided that it should not contain testimonials or endorsements concerning members or names of the clients, both the past and the present, or the fees charged. In the earlier code, it was given that the write-up should not contain any other representations that might likely cause a person to misunderstand or to be deceived, while there is no corresponding provision in the revised code now. In the earlier code, it was given that the write-up should not violate the provisions of the Act and the rules made thereunder, along with the Chartered Accountants Regulations 1988, and in the revised code, it has been provided that it must not be violative of any provisions of the Chartered Accountants Act 1949, Chartered Accountants Regulations 1988, or the Code of Ethics. In the earlier code, it was given that the write-up should not include the names of the client, both past and present. In the revised code, this has been covered in point 4. In the earlier code, it was given that the write-up should not be of font size exceeding 14. In the revised code, a similar provision is there. In the earlier code, it was given that the write-up should not contain any other information than stated in para 3 from the previous slide. In the revised code, this has been covered in the write-up may include only the following information. The earlier code prohibited the write-up from containing any information about the achievements or awards of any other positions held. Now the revised code has allowed mentioning of the awards given by the state or the central government or by regulatory bodies. Further, any accreditation granted by any organization is also not supposed to be mentioned. In the earlier code, it was given that the particulars of the information required in para 2 of 3A and para 2 of 3B above is mandatory. In the revised code, the provision is that the membership number or the FRN, as may be applicable, is mandatory to be mentioned in the write-up. In the revised code, it is mentioned that ICAI may issue directive for the removal or withdrawal of the whole write-up or any part thereof, while there was no provision for the same in the earlier code. The changes in the revised code with respect to the Council General Guidelines are as follows. Chapter 3, Appointment of a Member as a Cost Auditor, has been repealed as Section 148 of the Companies Act 2013 requires cost accountants. Chapter 4, Opinion on the Financial Statements when there is a substantial interest of the relatives, has been repealed as it was found to have duplicity with Appendix 9 of the Chartered Accountants Regulations 1988, which also defines substantial interest of relatives. Under Chapter 6, Tax Audit Assignments under Section 44AB of the Income Tax Act 1961, the exempted audits are 44AD, 44ADA and 44AE in accordance with the decisions taken at the 368th Council meeting in 2017. Tax audit limits have been increased from 45 to 60 in accordance with the decisions taken at the 331st meeting of the Council held in February 2014. Financial year has been changed to assessment year. One partner may sign the audits on behalf of other partners. Under Chapter 12, minimum fee in respect of audit has been repealed in accordance with the decisions taken by the Council at its 306th meeting held from 7th to 8th June 2011. UDIN, networking, responding to tenders, logo, and corporate form of practice have also been incorporated in the Council General Guidelines 2008. Earlier, the chapter in self-regulatory measures recommended by the Council had 40% limit on the fee from one or more clients under the same management. Exemptions from this were given to those charging less than 2 lakh annual fee and those auditing the government companies, public undertakings, nationalized banks, public financial institutions, or where appointments were made by the government. The revised code prescribes that more than 15% fees from a single client consecutively for 2 years shall require disclosure to those charged with governance. Same exceptions apply as in the case of self-regulatory measures. Further, the annual fees exempted has been increased to Rs 5 lakhs from Rs 2 lakhs. Chapter 7.6 of self-regulatory measures have also been repealed. Following changes are there in the appendices as compared to the earlier code. Earlier, Appendix A was recognized bodies under Section 7 and now it is a list of engagement and quality control standards. Earlier, Appendix B was the announcement regarding the withdrawal of Appendix number 6 of the Institute's publications, viz. The Chartered Accountants Act 1949. Now, it is a list of accounting standards effective as on 1st April 2019. Earlier, Appendix C was the announcement regarding withdrawal of Appendix number 5 of Institute's publications with the Chartered Accountants Act 1949. Now, it is the disciplinary flowcharts. Earlier, Appendix D was the guidelines of the Council in context of use of designations, etc. and manner of printing of letterheads and visiting cards, and now it's the guidelines for practice in the corporate form of practice. Earlier, Appendix E was the ESB mission statement and procedure for removal of unjustified removal of auditors, and now it is a membership of foreign bodies permitted under Clause 4. Earlier, Appendix F was Appendix 9 of the CA Regulations 1988, and now It is the guidelines of the Council in context of the use of designation, etc., and the manner of printing letterheads and visiting cards. New appendices in the revised code are as follows. Appendix G containing the ESB mission statement and procedure for removal of unjustified removal of auditors. Appendix H containing the Appendix 9 of CA Regulations 1988. In the earlier code, this was in the Appendix F. Appendix I containing notification on UDIN. Appendix J containing notifications on tenders. Appendix K containing the revised guidelines of network, and Appendix L containing the CA logo guidelines. Following are the changes in the revised code regarding the terms of reference of Ethical Standards Board and the procedure of unjustified removal of auditor. Mission statement of ESB has now been referred to as the purpose. Purpose and objective of ESB are aligned as per the ISBA code. As per the new terms of reference, ESB will review the terms of reference every 2 years. Electronic filing of complaint of unjustified removal of auditor is now possible. A submission of fee of ₹1,000 has been permitted by NEFT. We may now have a bird's eye view of the Volume 3 of the Revised Code of Ethics. All the case laws appearing hitherto under the Commentary under Code of Ethics 2009 have been shifted to the Case Laws Referencer. This appears as a separate volume in the Revised Code of Ethics, that is, the Volume 3. This incorporates relevant decided or published case laws of both schedules till 1st of April 2019. These cases have been segregated issue-wise in the index. All the case laws have been numbered for easy reference. With this, we come to an end to our presentation. Thank you.